Welcome to the Wealth Renegade podcast. I'm your host, Robby Butler. Have you celebrated your financial independence today? Today, I am so excited about the deep and broad conversation we are going to have today with my good friend, David Shirkey. David, thank you for joining us.
Hey, Robby, it's a pleasure and look forward to it.
So as David knows, we're going to get to cover so much of what you have experienced as an investor across multiple asset classes. You began with manufacturing businesses. You've got experience adding businesses to your portfolio. You like to look at various cash flow strategies, but you've also touched multiple other asset classes. So in the conversation today, what we're going to work to do is to talk for 50% of our conversation about your overall portfolio, the context that we're operating in, and the remaining 50%, we will focus on Bitcoin because you've not only had personal experience with Bitcoin, but you have pushed the envelope in going to test and see use cases of Bitcoin as a strategy and as a future for economies, currency, money, wealth. And so we'll cover both those things in as brief a conversation as we can possibly make it. So, David, if you would be willing to run us through the overall view, maybe a little bit of history blended in on how you came to this point as an investor today.
Okay, sure. Well, I'm very fortunate in that I'm kind of I'm part of the second generation of a family business, I guess you could say. And our family owns a manufacturing company here in Michigan. And over time, we've been able to acquire a couple other businesses to add to our manufacturing, I guess, portfolio. And then I think what brings us together was that in 2015, I was able to start focusing some of my attention into looking for investments outside of our main businesses. So I was able to look at, just have time to research and look into other asset classes, both for myself personally and for our multi-generation family. And that's allowed me a lot of unique opportunities to invest in different asset classes.
For most people, making that leap is a once in a lifetime type of leap. They go, well, and now we're real estate investors and they buy a few single family homes and that's it. But you've been able to take that much further. So can you give us an outline on the various, let's call them asset classes that
Yeah.
you...
So I don't want to make it sound like there was some plan or huge strategy here. I just had time, and that time allowed me to look for things and talk to my father and my brothers. And some of the things that we really dove deep into and have invested in are mobile home parks, apartment buildings, and industrial warehouse real estate. Those are kind of the three real estate asset classes that we've chosen to learn about and become fairly significant portion of our portfolio as limited partners in those asset classes. Mobile home parks is the biggest one for sure. But in addition to that, we also have, as a different kind of strategy, we also have deployed significant amounts of our capital into whole life insurance. And this is a big topic, but basically all three generations, my parents, my siblings and our spouses, and then our kids. So Gen 1, Gen 2, Gen 3, we've tried to follow some of the things we've learned about multi-generation life insurance planning and basically building our financial system on that. And then using and collateralizing that to make most of the investments that we're talking about today. And then there's a spattering of other private or limited partner investments, but those are the big tenets.
It's so cool. And the way that you described getting into it, it didn't begin with intention, but I do imagine over the 8-year period from when you started making investments outside of your core niche, some of that strategy started to inform. So today, what's the core philosophy that makes you say, okay, yes and no, and yes and no, and yes, we'll look deeper, or we're throwing this out? What's behind that decision?
Okay. Well, it's funny. I'm just going to use some examples. So the last year and a half, it's been challenging because we haven't been deploying a lot of capital in these real estate ventures. And I've been really trying to stick to the mantra of, we look for cash flow, we look for tax efficiency, and we look for long-term holds. And it's really not that easy to find that combo, especially the long-term hold. Long-term hold is very challenging to find as a limited partner or a passive investor. But I also, tax efficiency often isn't that hard to find, but today cash flow is hard to find because sellers still haven't, I guess, acquiesced to maybe market interest rates. And so it's been challenging because I feel like prices prices haven't come down enough to make properties cash flow well enough for my interests recently. But those were like the tenets of our investing philosophy. We're not really into venture capital. We're not really into aggressive appreciation. It's more about stability, except maybe when we talk about Bitcoin later on, that has a whole different set of tenets.
And once we get there, I cannot wait to hear how that started to trickle and then flow into your overall investment strategy. One last question on the overall portfolio. When you are looking at your life insurance strategy, I think that describes an ultra steady base. At what point did you realize all these things could work harmoniously together? What were some of the insights along the way that said, wow, this all does connect?
Well, I think I don't want to sound like I'm a know-it-all or anything, but I think there's certain things in life where if you spend enough time, if you're blessed or willing to spend enough time on certain topics, they start to make a lot of sense. And I believe building a financial foundation on life insurance makes a whole heck of a lot of sense, regardless what you want to invest in or what you want to do. There's this simple concept that maybe the only thing certain in life is that we're going to die. And it sounds crazy to bring that up. That's a certainty that you can kind of leverage off of. And again, this is a huge topic, but there's just a lot of advantages of putting your savings or your excess cash flow into life insurance and then building that system and then leveraging your cash value or collateralizing your cash value and using that to pay your bills, to invest, forgiving is a big topic. But so I think life insurance and investments, they just go totally hand in hand, but it takes a while to get comfortable with that philosophy. And you also have to have a long-term mindset. Again, I told you, I look for long-term investments, long-term holds. Life insurance is the ultimate long-term hold because ultimately the goal is to use it while I'm alive, use it while my parents are alive, but then it acts as like a waterfall for the future generations. And hopefully if we teach them, they'll be able to take advantage of that.
And someday, hopefully, we'll get into what that teaching element looks like because for you, it's clear you've been able to spend the time to consider how the strategies influence each other. And you're in at least four asset classes we've mentioned, then there probably are more. And yet it took the time to be able to say, this is what we're working on. So at some point in between 2016, or maybe it was earlier, but sometime between 2016 and today, you also started studying Bitcoin. Walk us through your first exposure, your middle ground, and where you're at today in terms of Bitcoin and where it fits.
Okay. First exposure was gambling. And that was in like 2016, 2017. And I can remember like it was yesterday telling my wife, hey, I bought a couple of Bitcoin for $600 each. And now they're worth 1,200. So I'm going to sell and we recoup our investment. And then I think I did that 2 or 3 times. And I felt that was cool. That was kind of a fun endeavor, but then kind of forgot about Bitcoin, honestly, as I got into this real estate, limited partner investing, and the whole life insurance strategy. And then fast forward to 2020, February 2020, a family friend, highly technical and knowledgeable, experienced man, basically taught us about what is money. What is money? What is fiat money? What is the Federal Reserve? What is inflation? And basically the question was just basically, okay, now that we accept this and know this and understand this, where do you want to put some of your savings? And that was the entrance into really wanting to learn about Bitcoin was, do I understand and believe that there is an asset that is cryptographically or computer programmed in such a way that there's a certain supply, and is it really like a digital gold? And is it really going to become popular and useful and used by the citizens of the world? And all these questions you ask yourself. But at the end of the day, I think it's a very smart place to start putting some of your savings. And really, there's nothing else I can invest in that has I hate to use these fancy words, but it has the asymmetric return potential that Bitcoin does. There's just nothing else I can do. And I definitely don't want to keep fiat money, fiat currency. And so now it's become, I guess, like a digital gold kind of asset for me.
You put it as digital gold, and so I want to ask this question to hear if this is accurate. You also described it as the growth component of the portfolio, nothing else with that asymmetric upside. So is that a conscious decision, or is there the elements of gold as well that you like? What between those two frameworks?
I think primarily it's first, it's what are you going to do besides keeping fiat? What are you going to do? And yeah, we have life insurance, we have real estate, and life insurance is a safety position, not maybe not a super great inflation hedge. And then real estate is a potentially an inflation hedge, but it's got a lot of factors that are they're challenging, maintenance and
Taxes.
taxes and all that kind of stuff. And so I became comfortable that I was going to no longer look for more gold or silver. I was going to I was going to use Bitcoin as what I used to consider gold as. But then the potential of Bitcoin is if only if right now, maybe a couple 100 million people, probably even less, even consider it as digital gold. But I believe over time, millions more and millions more and maybe a billion one day will consider it as digital gold. And I hate to even imagine what that means for the fiat price of Bitcoin, but I believe it could be extremely high.
Yeah. So you recently went to El Salvador, which for our listener who doesn't know the whole universe of Bitcoin is a country that has accepted it as part of its currency and is now willing to do transactions at a much greater degree than most people are. So you went down and looked at it specifically. How many months ago was that now?
That was only 3 weeks ago.
Oh my gosh. Oh wow.
Yeah.
That is remarkable. Tell us about it. What did you see? What did
Yeah.
you think?
Yeah. So in 2021, El Salvador, the nation, made Bitcoin as legal tender, and their other currency is the U.S. dollar. Like they don't have their own currency, so they have the U.S. dollar, and this goes right along with my comments about is the U.S. dollar a good place to put your savings and to base your future, and fortunately, somebody else can control how much of that is generated and created. So El Salvador made that decision, and they've done a lot of education for their citizens, and basically, I hear a lot about Americans and Canadians and Europeans going to El Salvador to experience a Bitcoin economy, and I would say I was mostly just curious about that, and I would say I was a little bit underwhelmed. I mean, to be honest, in general, but certainly in certain cities, it was very easy to transact with Bitcoin. There's a town it's called Bitcoin Beach, is the nickname for the town. And yeah, everything we did there, we were able to do in Bitcoin: food, beverages, housing, drivers, jewelry, knickknacks. I mean, everything we purchased in Bitcoin. And then in other parts of the country, maybe like the airport and the road from the airport to the beach area, it's more hit or miss. But if you really search for it, you can find restaurants and stores that will accept Bitcoin. And I just looked at it almost as like a proof of concept. I've never done any in-person Bitcoin payments in the US. I've done a couple online payments for things with Bitcoin, but in El Salvador, I did 17 purchases, just normal everyday purchases. And it was pretty interesting to see. And I tell you, I feel like, again, a lot of times, like you want in golf, you're not going to initially enjoy golf until you give it 10, 20, 30 hours of effort and frustration. Same thing, I think, with Bitcoin. But for me, being able to see a person or see a vendor and send Bitcoin, and there's no intermediary, there's no credit card processor, there's no bank, it's just me and you, Robby. You give me a service and you tell me the price, and I send you Bitcoin from phone to phone or from wallet to wallet, and it's done. Like it's immediate, done. I think there's just immense power in that. But I have to realize that until you experience it, you don't understand it. But I think there's immense power in that.
You also have described to me a story of how you were looking to make let's call it an intercountry investment, sending money to another country, not when you were in El Salvador, but across the ocean to another country, and you used the Lightning Network so much more simply, so much more straightforward than any other banking transaction, wire transfer, ACH. And So that element also does come into play here. And I want to make sure that we get to touch on this piece that most of the difficulty with transacting Bitcoin is because of the hash rate, where the computational power requires additional cost to the transactors. And yet you also have used the other layers on the Bitcoin network. So tell us a little about those and how the Lightning Network and whatnot works.
Okay. Okay. So, okay, to make it real simple, there's a Bitcoin system. I would call it Bitcoin protocol. And yes, you can trade value on the Bitcoin protocol, but you aren't going to have immediate settlement. It might take 5 minutes, 10 minutes, 20 minutes, depending on, this is technicalities, but depending on the mining process and transaction confirmation. Okay. There's a layer two called Lightning. And I would just say something like this. Let's say layer two is like, maybe it's kind of like a credit card layer, and layer one is like wire transfers. So if you're buying a car from somebody, you want to see that settlement on layer one and the wire transfer settle before you hand over title to the car. But if you're buying a coffee or lunch, you're okay if maybe there's just a little less certainty, immediate certainty in that transaction. That's what Lightning layer two is. I believe it's totally secure, totally certain. But, and again, this is a deep topic. So I was transacting in Lightning in El Salvador. And you mentioned about an international. I actually paid for, before the trip, I paid for our house rent, which was significant. It was over $1,000 fiat value purchase. And that was made over Lightning before the trip. And so compare that to how else are you going to get the funds? I mean, I guess they would have to have a credit card, probably a credit card system, ACH system, which takes a whole bunch of effort and work to get that set up. Or you have a Lightning wallet. And this is what's beautiful, I think, for like El Salvador. I mean, the people there didn't all believe in Bitcoin. They didn't all understand what it was, but they understood how now I can have this very simple app on my phone, and I can trade value with people without having to give all my life history to a bank or the government, and we can just trade value. And it sounds simple, but I think as more and more people get experience with that, it's only going to become more and more of a big deal in our world.
How are you controlling the amount of exposure you have and the amount of exposure you want to Bitcoin in proportion to your real estate assets, your family vision, the cash flow components that you want? How do you pull all the levers there?
Yeah. Yeah. I mean, there's no answer. I'm not going to tell you there's any answer. All I can say is my wife and I talked about this a couple years ago, and we set goals for our family and for Bitcoin, for a number of Bitcoin for our family. And we've achieved that. And so now I think we have a modest weekly dollar cost averaging purchase, very modest, but our percent of net worth, just from the way Bitcoin has appreciated over time, has become considerable, but it's still not 15 and 20%. It's still below that. But I believe in 10, 15 years, I think this current level of our Bitcoin amount is going to be half or more of our net worth, because in the long term, I believe Bitcoin will just continue to become more and more powerful as an asset to hold.
So cool. So in terms of an asset to hold, are you using cold storage? Are you using it in regular cryptocurrency wallets? What's the philosophy there?
Yes, I learned about offline storage or cold storage. And once I understood that and realized, I saw some of the shenanigans that happen, like with FTX and Free Arrows and BlockFi, I was like, okay, I gotta learn about this. So yes, I would say our Bitcoin savings or our vault is offline, and our Bitcoin checking account, we have a online wallet for going to El Salvador and paying for hotel or paying for Airbnb and paying for coffee and drivers. But it's 99% is offline in cold storage.
So for a listener who's not even thought that deeply about their Bitcoin holdings, if we thought about real estate assets that were ultra long term, you might hold those in trust. You might hold those in a domestic asset protection trust. You may move those into different, let's call them entities or holding strategies to protect them additionally. And cold storage has that essential feature, the ability to store it away out of reach of digital tracking, of hacking attempts, out of reach of other, what's the phrase? It's I'll pause the episode, and it's, what do you call this? It's counterparty risk. Out of
Counterparty risk.
the total out of the reach of counterparty risk. And those strategies are important for all assets, but it is also available for Bitcoin. And no surprise that you're that tapped into it, David, given that you see this becoming such a significant portion of your net worth in the future. So, as we wrap up here, for a piece of your unique portfolio theory, you have your family included, you have the generation above you, the generation below you. So, in all of these things, can you give us just a little insight on how you managed to keep all of that in line? What the thought is there with the inclusion of family?
Yeah, how do we keep that in line? Well, I guess there's certain very tangible things we do. For decision making, basically, we have my father and my brother and brother-in-law and I have to be in agreement, unanimous decision before we deploy capital.
Well,
That's one. So that's communication. Publish an annual report on the portfolio and how did it perform last year, what lessons did we learn, good and bad, and what our objectives are for this year, which again, it's not perfect. It's just, and then we do have family meetings with all generations. The biggest one is an annual, we call it 10 meeting. And that means we look at our performance of the portfolio for the prior year and we say, okay, 10% is going to be donated, 80% is going to be reinvested, 10% was going to be enjoyed. And then that is a point in time where the family gets together, all 25 of us from 3 generations, and we propose organizations to donate to. And then we vote. And then we talk about where did these opportunities for us to donate even come from? And we talk about the different assets that we're blessed to own. And we talk about we talk about the employees. We talk about grandma and grandpa and what they did 30, 40 years ago. We talk about our employees and our people. We talk about our asset managers and our investment sponsors. And again, this isn't like a Wall Street discussion, but it's just, and then we have the cash flow game. We have cash flow for kids. So we've had family meetings where the grandkids have pitched business ideas. We voted on the winner. I mean, and again, I'm not trying to make this sound perfect, but we definitely try to take an annual trip as a 3 generation family, and we try to have a couple times during that week or so of intentional discussions about our family business and family investments and our family goals.
Well, David made this comment many times that he feels this is not perfect, but I think we all know that the perfect is the enemy of the good. And for all the visionary work that his family is doing, it is so clear that this is good. And what better way to implement true long-term thinking? The kids are involved, the grandparents are involved, there's communication, there's flow. And again, the perfect is the enemy of the good. And this is so good to hear. So, David, thank you so much for spending time with us today, for sharing your thoughts on the breadth and the depth of your portfolio. And so, if people want to figure out how to learn more, they want to implement some of the things you're doing, how can they learn or be in touch or follow along with what you're working on?
Well, Robbie, I'm happy if you want to share my email address in the show notes or whatever, or my Twitter handle, either way. But I think I really enjoy meeting people. And if I can help in any way, I will.
Fantastic. Well, thank you so much for being here today and for sharing all that you did with our listeners.